Hello, my friends. My name is Ryan Delaney, and I'm here to talk to you about the coffee market. Specifically, I'm going to talk to you about coffee fundamentals, what's happening right now, the latest in April 2025, in late April 2025. And this is a difficult topic in the simplest of times, and unfortunately, these times are anything but simple. Now, fortunately for you, deciphering difficult topics is what I do for a living. I'm the founder and chief analyst at Coffee Trading Academy, and what we do is provide research and training on the global coffee markets. We believe in applying rigorous academic research and methodology, but presenting it in a clear and understandable way, and maybe even make it a little bit fun. To that end, I do try to work in some dad jokes into my presentations, but to be honest, making dad jokes is a lot of work. So oftentimes I'll just tell people that I make a lot of jokes and that I'm super funny, and sometimes people believe me. So let me tell you, boy, do I make a lot of jokes, and man, am I funny. Trust me. All right, with our dad joke out of the way, let's get down to business. We are in a difficult time, and we probably have a tough year ahead. The fundamentals are tight, but I think what it's going to come down to for this year is demand. If demand is sufficiently curtailed, we could see prices fall. If not, we could be in for a wild ride. So in this presentation, I'm going to tell you my framework for understanding the fundamentals. I'll provide context on how we got here. I'll tell you what I think will happen, and I'll wrap it up by giving you some takeaways and conclusions. So as I said, we are in a difficult time. In absolute dollar terms, the market is more expensive now than it has ever been. Of course, when we adjust for inflation, we get a more nuanced story, but the significance of $4 coffee is very real, as these are literally prices that no one has ever seen before. As I said, the future is all going to come down to demand. Not tariffs, not AI, demand. Prices are so high that we're going to have to change consumption patterns. I'm going to tell you why I think that is in a little bit, but in order for that to make sense, we have to get on the same page on the context. So how did we get here? Coffee is mostly a supply commodity. In other words, supply is always the sexy story in the coffee market. When I was first learning about coffee fundamentals, demand was always kind of an afterthought. The mantra was that demand grows steadily at 2% per year, and we didn't really have to worry about it too much. Now this makes sense because demand for coffee is inelastic. That means that demand doesn't really change much in relation to price. This is because the bulk of destination market consumers do not change their consumption patterns based on price. For most of us, if a cup of coffee costs $1 or $2, we don't drink any more or any less. When was the last time you paid $10 for a cup of coffee at a fancy coffee shop? Therefore, in order for consumption patterns to change just a little bit, prices will need to move a lot. Incidentally, supply is also inelastic in coffee. The farmers will plant more coffee if it is profitable, but they can't magic up more coffee right now. It takes years to increase the supply. Similarly, if there is too much coffee planted and farmers are losing money, they can't just turn coffee trees into a more profitable crop. They need time and expertise and resources to transition to another crop, and that takes time. So there is a lag between production and prices. Now, the coffee industry had found a solution to the problem of inelasticity that worked pretty well for a long time. That solution was stocks or inventory levels. If the world keeps large amounts of coffee stocks on hand when there is scarcity of coffee, prices will rise, which will incentivize the production of coffee, and stocks will draw down while the new increase in coffee is planted. When prices fall, the world rebuilds stocks for the market's next supply shock, and farmers reorient themselves to producing other crops or simply invest less time and effort into coffee production. So we can see that the fundamentals is kind of like a pendulum, right? Between oversupply and undersupply. Now, this worked pretty well for a long time. So here you can see the price of coffee over the last 50 years. And you can see we had rises and falls, right? Until today. Now we just have a rise. So what happened? What happened was we ran out of supply. The key to understanding supply is Brazil. Brazil produces 40% of the world's coffee and close to 50% of the world's Arabica. Moreover, Brazilian naturals do not diminish in value or cup quality as much as washed coffees do, so they make an excellent buffer to supply. Unfortunately, Brazilian coffee is also largely produced in one particular microclimate, and so we see large swings in production depending on the weather in that region. The last major upswing for Brazil was back in 2020-2021, when Brazil produced a large supply of coffee. It was one of those mammoth crops that Brazil often promises and frequently delivers. Now, this large amount of coffee fueled a major surplus in coffee, which dramatically reduced prices and replenished stocks globally. That was until 2020. Remember what happened in 2020? COVID. And with COVID, we had all kinds of logistical problems and import problems. The market said, okay, no big deal. We'll just draw down destination stocks, and then we'll build them back up when COVID subsides. After all, 22 and 23 will be a bumper crop in Brazil, and we will have plenty of coffee then, right? So phase 1 worked out. We drew down the stocks. Unfortunately, phase 2, rebuild the stocks, didn't quite work out so well. In 2021, we had the worst frost in Brazil in 40 years. The Brazil 22 crop was decimated, and the world was scrambling for Brazil replacements. One of the largest sources of Brazil replacements was the certified inventory. When we drew down the certified inventory and destination stocks in general, we saw something that the coffee market had not seen in decades: a market inversion. Now, if you don't know what a market inversion is, it's a bit beyond the scope of this particular presentation to explain in detail. We can talk more about it later, but the important takeaway is that it made the cost of carrying coffee, that is, storing coffee in a warehouse, much more expensive. Now, holding coffee in a warehouse has become a huge liability. To make matters worse, the massive quantitative easing and fiscal stimulus caused unprecedented inflation, which had to be contained with high interest rates. High interest rates raised both the cost of borrowing money and the opportunity cost of keeping your assets in physical goods like coffee stocks. All of this led to the new idea among roasters and importers to move to a just-in-time model of inventory. Instead of large stocks in destination, we will keep low inventory levels on hand and store the coffee in origin where it is cheaper. When we need to consume the coffee, we will import it just in time. After all, we can always rebuild stocks in 24 with the next bumper crop. Unfortunately, it didn't work out that way. Weather problems in Brazil hit the Brazil crop again and again, and the 24-25 crop failed to materialize the bumper crop that the market needed. 25-26 will be an off-year crop, and so that is not likely to save the market either. So for the time being, we have a problem. Now this brings us to the present. We have passed the buck, and now the situation is critical. Up until this point, the market has not really needed to ration demand because we've been able to draw down stocks. As the stocks fall, prices rise, which raises future production. Now, this is exactly what happened in the present this time. As stocks have drawn down, the market has duly been increasing in price. However, now it looks like we don't really have the supply in stocks to be able to drink the same amount of coffee that we may feel like. We're going to have to ration demand. Now, just because demand for coffee is inelastic, that doesn't mean that it is static. It can change in reaction to price. It just needs to price to change a lot. So it does seem likely that prices will have to stay high to keep demand down. Another mitigating factor for demand would be tariffs. Tariffs will raise prices for consumers and therefore reduce consumption. At present, rates are 10% for most countries, and traders who are selling to roasters TDP, that is tariff and duty paid, are already adding in 10% premiums. So we can expect this to have an impact on demand. In addition to demand reduction, coffee also has a secret weapon, and this is Robusta. While demand is inelastic when moving from drinking some coffee to no coffee, demand can very easily shift between Arabica and Robusta. And this almost certainly seems like it has to happen. While coffee had a small surplus this year and next year, that surplus is coming from Robusta. So if demand has to be rationed from Arabica, the first place that it will go is to the Robusta market. That is a good place for the demand because the Robusta crop in Brazil has actually done quite well. Vietnam and Indonesia are also improving their crops. Now going forward, demand will have to be rationed. If we have the same demand for Arabica in 25-26 as we had in 24-25, we will see a rather unhappy deficit in Arabica. With prices as high as they are, this does seem improbable. We also have something else to consider, which is an economic recession. Right now, markets are pricing in major recession by the end of the year. This could be North American based or it could be global. But given the interconnectivity of the global financial system, to me it seems likely to be global. With consumers pinching their pennies and finding ways to spend less, perhaps by being more efficient in their consumption of coffee and also by drinking cheaper coffee, we can see consumption habits change. And demand numbers will curtail, especially for Arabica. Meanwhile, for farmers, global prices for coffee are very good. In terms of outright selling value, farmers have never had it so good. It is likely that farmers the world over are investing in their coffee farms and working on increasing productivity. This means that production will increase, and all things being equal, we should see a huge increase in production in Brazil for the 26-27 bumper crop and elsewhere around the world. At that point, remember that supply has a lag, so we could see the heavy investments in production bearing fruit at a time when demand has curtailed from high prices and weak economic conditions, which would lead to a rebuilding of stocks. So, will prices fall? Ultimately, it is inevitable that prices will fall. There are a few things that we'll have to watch out for, though. In the short term, bean size in Brazil. There's early indications that there could be problems there, but we won't know for sure until the harvest. While the situation is, with the situation as dire as it is now, that can spook the market. In the medium term, it is demand reduction and rotation into Robusta. One key place we will see this is in the Brazilian exports. If Brazil is consuming more Robusta domestically, we may see less Robusta exports. In the long term, it's going to be certified inventory. In order for the inversion to be solved, we need to replenish certified inventory. If we see growth above that million bag threshold, that will be a good sign, but this will be a lagging indicator. The leading indicator will be the Brazil 26-27 crop. If that crop fails, the coffee market will be in big trouble. So we will be watching the weather closely there. Finally, I want to mention timing. The market is made up of people, and what the market is pricing in depends on what the people are focused on. The market doesn't act on certainty. It has to be faster than that. The market will start to fall the moment traders believe a big crop is possible. It will collapse by the time it becomes likely. By the time the 26 crop is here, the market will already be chasing something else. Now remember, the market doesn't respond to certainty, it responds to probability. And when people's perception has completely shifted to certainty, the floor will already be in. Now, thank you very much for your attention. If you like the way we talk about the market, and we'd like to invite you to subscribe to a free trial in our market research. We are also conducting our next Coffee Traders course just a month away in July. We'd love to have you join us. You can contact us at coffeetradingacademy.com, or you can fill out the form using the QR code for more information. Thanks, and I'll talk to you next time.